Welcome to Eyes Opening FX. So today we'll be talking about the major things as a trader, the major three things you need in this world in your trading career. So the first thing you need is your what? The strategy, which is edge over the market. Now this strategy aids you to when to buy in the market, when to sell, when to wait. So once you're able to focus on this strategy, it will help you to know the right timing to buy and all. Now another thing, we have what we call risk management. Now this risk management is another aid that will help you to build your career as a trader. Now, the risk management is what it play an important role in all trading life. So if you're not good in risk management, believe me, you can never be what consistent or profitable as what a trader. So once you have this risk management and understand how it work, then you'll be what profitable with what consistency. So the third one is what we call psychology. The third one is what we call psychology. Now, this is the aspect that you need to what discipline yourself. Now, you need what someone that will guide you on how to discipline yourself, on how to what focus on your daily routine, things you need to do first in the morning, things you need to do first as a trader. This is what your trading lifestyle you will have to what exhibit. So these are the major things we will be what teaching you in Eyes Open FX. So we'll be doing more on these stuffs on our YouTube here. So do well to subscribe and share. So I'll be showing you one easy strategy, a winning strategy that you just need with just simple market structure and entering pattern. So do well, subscribe and turn on your notification button so you will be notified whenever we post any video.
Like I was saying, so this is the one killing strategy that everyone needs. So the first thing is understanding what we call market structure. Understanding what we call market structure. So in this aspect, we have this what as what a structure range from this lowest low to this high, this range high. So since this is what your structure range, now as a trader, you must understand what you are doing on the chart. You have to trade with what understanding. So once you are able to trade with understanding, you can become profitable, right? So which is your strategy. Now, if this is your POI, you will what expect market to trade into this zone. You will expect market to what to rally into this what into this zone. So when market get into this zone, you have to what have the perfect notes. You have to what have what a correct point of interest. You don't pick anyhow point of interest. That's why most of you get what a wrong lower time frame confirmation. Why? Because of what we are trading in what any point of interest you see, any zone or any candle you see, you call it point of what interest. Those are what bad trading. You can easily what blow your account. But how to preserve your account and what be making consistent what profit? You have to what understand the perfect point of what interest. So after having the idea of perfect point of interest, then you have a rule of what your time frame. So as market gets into this POY, you have what a time frame that this break of structure will happen, not anyhow time frame. So once this what based on the time frame, let's say for example, this is what your 1 hour time frame, your 1 hour time frame point of interest. The confirmation is on what on M5. So once market now get into this what your time frame, then you will expect what market to what break this low. So as market break this low is what we call intent. This low is what we call intent. So this intent mean intention for what a change of trend. So after having this intention of change of trend, we have your what your POI. You have what your perfect POI. having your liquidity and all, then you will know when market what where market is what heading to. So this is what we are talking about, when to buy. After knowing when to buy, which is time, which is part of what your psychology. So that is when to what buy or when to sell. Then you know where, which is the area, the point of interest, perfect POI of where to what take your what trade. Now after knowing where, the next thing is what we call the next thing is what we call the next thing is what we call what the market is doing at this particular area. So now let's take for example, you already know that this is where to buy. You already know that this is what when to buy, which is your time based on your discipline and your time zone. Majorly, what you have some major session, London, New York, and what Asian session. So now let's say, for example, around this area we have our market is already what in London session. So you have to know what is the reason why you are, or what made you to what to buy or to be looking for sell around this area. All right. So now, if you are looking for sell, that means you have to wait for this what intent for lower time for confirmation. So though it's not compulsory that you must wait for what lower time confirmation. Once you have the what your perfect POY, and once everything is what in line correctly. So now, after having this area, you wait for market to trade, let's say to create inducement, which is your liquidity here, then market to trade into a POY, and you take your trade for what a bearish continuation. This is a simple pattern that every trader needs. So once you have this, then you note your what when market was buying, you note what your structure perfectly, so that you know when to what where to call a break of structure, because intent is quite different from our minor break of what structure. So these are the major things you need as what a trader. So that is that. So we have what a POI, which is what basically imbalance. So you have to know the imbalance that market will use and the ones market will not what use, because market don't use all imbalance. So we have the major ones that market use and the ones it doesn't what use based on what your inducement. So we have imbalance here as what a POI. So as market trade into this imbalance area, so what is the major thing you have to what do? You have to what focus on what market is doing on your time frame. So now let's take for example, we have this time frame here on M15. So you expect market now to trade into the POI. Now market has already traded into the POI. Look at what market did here as it traded into the what POI. It created what a higher high. Then this is what your range low. Your range low. So if this low is taken at this POI area, we call this intent. We call this what intent for what a bearish trend. We call this what intent for what a bearish trend. So now this low has been what taken. So we call it intent. So after intent, we do expect what we call mitigation within internal structure area, how market mitigates zones and all. You have to what deal with those. So which is not what part of what I'm talking about. So the major thing is how to join the major trend. So now let's see. So market was able to what create this lower high, this major lower high as what inducement. So this first high created here is basically what we call inducement high. This is what our inducement high at what POI. So after having your inducement, the next thing is for what market to come and give you what entry at your what perfect POI. So we have our SC candle here. Below it, have a little what imbalance. So this area is your what your POI now for what a bearish trend. So you take your trade, you know to what your nearest range where market is heading to, or where market has not what traded into as what your TP level. Boom. So this is basically how you what a trader should be what trading. Now it broke new lower low, so it has already created a major high here now. This being a lower low, a lower high. So once market now come back, you know to what your nearest what liquidity level for entry again, for what your second entry from what your nearest what POI again. So this is a simple strategy that each trader needs to learn. So from there, boom, a continuation to the bearish trend, a continuation to the what bearish trend. So around this area, market is consolidating, which is none of your what your business. So after creating this, this is your what your target, your second target. So the next thing you have to do is what you note what your POI again, where to join the trend. So you wait for market to what get to your what POI, which is what patient as a trader. So market is already at your what your POI. So once market trade into your POI based on what M15 structure, so you have your lower time frame for what confirmation and all. So you set your stop loss just one pips above this because of what spread, which is very what important. So once you set your stop loss like that, then your TP below this recent low as what short-term TP. So you continue again. So this is what we call a perfect trading what strategy. So this is how trading work. This is how what your trading work. So good luck, good trading. Please don't forget to subscribe and share with your family and friends. So and turn on the what notification button because we'll be posting more almost what every week here on YouTube.